Hello, good morning, everybody, and welcome to the Daily Energy Markets podcast. It is September 26th. It's 10:30 in the morning, at least that's the time in Dubai. It's probably some crazy hour in the location of our panelists, and so we thank them for their early rise or staying up late, whatever the case may be. The outlook for Brent this morning is a more robust sense of things. The gains of the week, knocking on the door of $70 a barrel, up about a 1/4% today, but big moves through the week. Let's kick off this morning in Dubai with Amina Bakr, head of Middle East Energy and OPEC Plus research at Kepler. Amina, what do you think is the biggest driver for oil prices as we move now into the fourth quarter? Is it supply surplus or is it what supply surplus are you talking about?
Good morning, Sean. Yeah, thanks for asking that question. I think the expectation or the kind of herd mentality, especially around the fourth quarter of this year, moving into Q1 next year, is that huge surpluses or a big glut is going to cause oil prices to crash. I mean, some forecasts even put the price in the 50s. And as you said, we're almost reaching $70 now. I think the main reason for that is because we haven't seen any buildup in OECD inventories, global inventory levels. There's been a draw in US stocks. The only buildup in stocks has been in China. They're continuously buying. Now, on why we're seeing this gain, especially looking at this week, it's because of the geopolitical premium and the geopolitical risks. There's been a lot of headlines around the Ukraine attacks in Russia, the possibility of loss of supply. And we're also dealing with a situation, Sean, where we don't have that spare capacity available anymore within the OPEC Plus group as they unwind these cuts. The only two countries that really hold spare capacity are the UAE and Saudi Arabia. So lack of spare capacity, a heightened geopolitical risk, no indications that stocks are building in OECD and globally. I think that combination of factors is the reason we're seeing the price where it is.
Ahmed Mehdi, Managing Director of Renaissance Energy Advisors and a Senior Fellow at the Oxford Institute of Energy Studies in the UK. Ahmed, your thoughts on the same question. I mean, is this just good old-fashioned demand? We're seeing the US economy, despite all of the traumas and dramas of Trump 2.0, going into the fourth quarter with macro data looking quite positive.
Hi, Sean. Good morning. Well, I think Amina points to an interesting dynamic, which is the asymmetric situation with inventory builds. So obviously, centers of price formation are not seeing dramatic builds, and obviously the stockpiling story continues. But also, I think
Centers of price formation, just work that out for me,
so.
for us
Basically,
less
OECD.
technical people.
Yeah, so the relationship between OECD inventories and time spreads. So typically, when OECD inventories rise, you'd see pressures on time spreads, and actually, obviously, the flat price is still above. It's been flirting with 68, 69, for quite a few weeks now. But I think that the refining margins and the refining cracks, obviously, with the Russia disruption, is a big part of the story as well. So naturally, the geopolitical aspect is still unfinished business going on with Russia, and obviously there's developments also working out their way with diesel cracks as well, which is continuing. And most people had expected that volatility to compress slightly, but it hasn't, and it's actually the drone strike seems to be getting more aggressive every week. And I think finally, the key point about why is the price there as well is also the view of balances as well. So what are the real numbers with regards to OPEC plus supply as well? What are the real barrels coming back versus the paper barrels? So I think once you put all those factors together, you start to see the price being where it is today is really driven by some of those factors.
Let's go to the United States to Max Torres, VP Exploration and Development at PetroTal. Max, I mean, looking at the sort of supply side of this story, the supply surplus, obviously that narrative has built solidly through the year on the back of the fact that OPEC Plus is adding its supply or removing its cuts, whichever way you want to frame it, 2.2 million barrels a day over Q2 and Q3, which is now coming to a close, and more supply increases, quota increases, one should say, coming next month. But what about real supply from the Americas and from the starting in the shale patch and then also into Guyana? We're seeing the U.S. military getting pretty active down there, would tell me there must be a lot more oil coming. Your thoughts on where the Americas play into this supply surplus narrative going into the fourth quarter?
Good morning, Sean. Very interesting question, very interesting topic. I think the supply we're seeing from the U.S., we are seeing a slowdown basically in the Permian. We are seeing less drilling, less service companies, less M&A activity. So on the U.S. front, I think we are seeing a mature Permian coming in, slowing down. So from that front, I basically don't see new sources of supply, at least, dramatic increases on that side. I don't see that.
Sorry, just to pick up on that, we have a story in our News Digest today, one of the stories saying that the U.S. shale costs of production have soared, as high as to $90 a barrel.
Yeah, indeed. I think, I mean, we are going to see probably more expensive, lifting costs. We are going to see an increase on costs, in general, as we mature, into the play. And then, we see activity in other fronts like in Alaska, Gulf of Mexico, but that is not going to, create any dramatic increases in the near term. Then, if we move to Latin America, South America, we see a lot of activity there from the political front, the Navy in front of Venezuela, Guyana. Then we see, very large discoveries, at least in Brazil. BP just announced, the largest discovery in 25 years, the Bumerangue pre-salt discovery in Brazil. They're talking about 3 billion barrels, so that is significant, as far as supply, in the next 5-10 years, not now, obviously. We see the sanction of the Hammerhead project in Guyana by Exxon. That's another significant move, from the Exxon front in Guyana. That is going to increase the production in Guyana to probably 1.5 million a day. Right now, they are 600,000. So Hammerhead is going to be another significant increase of production, from the supply side in Latin America. The rest, to be honest, I don't see much activity. I come, from the operator world. We are preparing for 55, 60, price, deck for the next 3 years, 2 years. That's the mindset.
What
In
is
my
the
view,
thinking? Sorry,
I think it's the wrong mindset, but yeah, go ahead. Sorry.
I was just a follow-up. What is the thinking in your neck of the woods as to what the U.S. military is communicating in off the coast of Venezuela and Guyana? I mean, they're hardly blowing boats out of the water because of drugs. I sort of don't really buy that narrative. What is the general view there, that the reasons behind this sort of robust engagement by the U.S. military?
To me, this is twofold. One is to protect the Guyana interest. There were some threats from the Maduro regime into Guyana, saying, I mean, Maduro has a lot of problems, obviously, and he's just waving the flag, against Guyana. So I think one move is just to protect the Exxon assets, which, as I said, they just sanctioned a very large, project, the Hammerhead project in Guyana. So, and we are also seeing new discoveries in Suriname as well. So, the region is going to be really active as far as investment and activity. So that's one of the reasons. The other reason, I think, is just to put some kind of pressure into Maduro regime for some political change, let's say, I don't know how effective that is going to be, but to me, these are the two main reasons.
Right.
But basically, just is right now is a nominal presence of the fleet, in front of Venezuela.
Amina, just to drill into, if I might use the phrase, the comments you made earlier about how big is the idle capacity and at what point does it start to put it was a bearish element not so long ago because there was so much of it. And now there's a sense, as you indicated, that there is not as much of it as there used to be in idle capacity. And so it's now a bullish sentiment. And I'm wondering, where are the specifics on that? I mean, we went into before OPEC Plus started to raise supply in the second quarter after, a number of years of cuts, that the idle supply was generally identified as 5 to 6 million barrels a day. Now, 6 months later, what's Kepler's view on that?
We don't have our estimates finalized at the moment, but I can give you a kind of a guesstimate where it is, Sean. It's around maybe 3.54 million barrels of immediate spare capacity that can come online. And I think part of the process that the OPEC members are going through now, and earlier this month on the 18th and 19th, they had a meeting in Vienna where they were discussing on how to define the new baselines that are going to take effect in 2027. And part of that process is hiring consultants to assess capacities. And they have to come up with a definition that kind of unites all of them, which is the maximum sustained capacity that could be brought in online within 30 days and maintained for 90 days. So this is something that they need to work on as a group and not just have, I don't know, the Gulf states, for example, having kind of the golden standard there on what is spare capacity versus other definitions of spare capacity. But yeah, that layer is really, really thinning out. I mean, we were talking about Russia earlier. We're even thinking, I mean, Russia's maximum capacity now, they're almost like kind of reaching their limits. Our estimates is that they're kind of capped at 9.4 million. So given the conditions, so that further kind of
So going
erodes
then
the
into the
condition.
fourth quarter with this next round of increases,
Mhm.
it's really more smoke and mirrors, isn't it? I mean, ultimately, there's only, as you said, UAE and Saudi that can really participate at any further increases.
Yeah, that's right. I mean, this kind of incremental plan to bring on more of the cuts. I mean, for example, out of the 137,000 barrels for October, maybe 70 or 60,000 will actually be real barrels versus the paper barrels. And if they want to unwind further, I mean, they're going to have their meeting on the 5th of October. So for November, they can continue doing that because the actual barrels are much less, as you pointed out.
Does that give, do you think, the countries that can increase, UAE and Saudi, the opportunity to swallow the quotas of others who can't? I mean, or will they hold back and just do their share?
Well, the barrels that they have cut, those are the barrel. I mean, if they can produce them, sure, they can, I mean, bring them back to the market.
I mean,
Everybody
Saudi
is
could
given.
swallow the whole 137 next month. I mean, they have that
No,
capacity.
they're not going to overproduce what their quotas are, if that's your
Okay.
question. No,
Yeah,
I
that
think
is
they're going to
ultimately.
produce their quotas, and that's it. And I think we're facing a different situation here, Sean. Earlier, we were talking about overproduction from Russia, from Iraq. We're going to get to a point where maybe we're going to get underproduction from these countries.
Ahmed, your thoughts on the same point, particularly in relation to Iraq, now that we are, stories seems to be bubbling to the surface. It has a few times, it's a bit like the boy crying wolf. Yes, the pipeline out of Kurdistan will be reopened to Turkey. It's now again, that's sort of in the headlines for next week. Your thoughts of that actually happening, and B, where that leaves Iraq in its compliance and OPEC Plus's ability to increase supply?
Yeah, I think that Amina raised a point well about the UAE and Saudi. I think partly one of the drivers, at least for this accelerated unwind, or at least the latest tranche, on a monthly basis, which can be reversed, is actually to see in real time, those countries, if they do not raise output or fully utilize their new quotas, that could undermine any arguments about the capacity assessment that's ongoing. Because in reality, as it was said, not all of those paper barrels will translate into physical supply, and actually most of those countries are actually at their limits. For Iraq, it's interesting, to be honest with you, there's a short term and a sort of medium term development with the country. In the short term, there is still the same infrastructural weaknesses, or rather, the weakness being the lack of flexibility on the connections between what's going on in the upstream, midstream, and the export infrastructure. So technically speaking, can they get, they could actually increase production capacity more. And already there's been very positive news from Total in the south. Recently, I think this week, there was some news about a bit of progress on improving the seawater injection project, because there's always a issue with the maturity of the reservoirs, and therefore you need a greater source of supply for water injection. I mean, it really varies in the Iraqi upstream, but typically the rule of thumb is maybe about 1.5 to 2 barrels of water for every barrel of oil produced. That's the maturity profile of the upstream. So actually, if you look at Total's progress, they are getting, for example, more traction with their project in the south, which was on hold for about, for a while. And that is really quite a key project, unlocking a lot of the Iraqi upstream potential in the, I would say, medium to long term. In the short term, the KRG story doesn't do anything to the fundamental balance, because you're just swapping out what was KRG production that was going into the domestic market now into the export market. But as you say, the boy who cried wolf, we've seen this movie before. We get very close to a deal, and then actually it falters at the end. And actually, as far as I understand now, the sticking points are around still one of the major producers, DNO, who is responsible for a large chunk of KRG crude supply, is still, I think, I haven't seen the news today, but as far as I understand, they're still sort of unsure as to whether they're going to be repaid the amount that they were owed. And also, the other thing is that whilst they have agreed packages, well, negotiations with term lifters for the marketing of the crude, historically, before this situation happened, KRG crude used to have a lot of attractiveness for trading houses, because they had pricing options. So you could choose the actual loading dates and then hedge those cargoes using weekly swap prices. Now, I think that there's going to be a repricing of those cargoes based upon the Kirkuk pricing formula. So there's lots of things that have been done that are positive, but the big elephant in the room is still about $1 billion that are owed these companies, and whether or not they've arranged payment schedules and all of those sticking issues still remains to be seen. But overall, I agree with what was said, that this doesn't fundamentally change the fact that Iraq is pretty much near, its production capacity. And
Regardless.
yeah.
Max, a lot of the momentum in the oil price upward seems to be the recent upward movement coming with the Donald Trump intervention of squeezing a little pressure on India, calling on the Europeans to cut out Russia, which is somewhat of a reversal of his general political posture towards Russia up till now. And then this commentary about, they should shoot down Russian aircraft that come into their space. So all of that kind of narrative has built up to, like, is Trump making a shift here towards Russia, or is this just sort of cheap talk that gets a higher oil price? Your thoughts on where that's at vis-a-vis Trump's view on the war with Russia?
Well, I think at the end of the day, I think he's a local politician. I think all these messages, in my view, are just directly to the local, customer here. I mean, whatever effect they have, on price, which to me, is going to be, minimum at the end of the day. I think to me, in my view, the all these messages, towards India and towards Russia, I think they're tailored for the local customer, And as you may know, there's a lot of, noise and turmoil here with the political violence that we experienced in the last couple of weeks, the different expressions. There were other violence events here in Texas, as a matter of fact, against the ICE police. So I think that there's some issues here in the local front, and I think he's trying to build momentum for himself, locally. That's my view.
So it's more it's the
yeah.
standard historical posture of the Republican Party to be quite hawkish on Russia, and he has been a big departure from that. Is this him coming home to the Republican tent a bit more, or is that too much to read into it?
But I think I agree. I think he's trying to build momentum here. He's trying to build his own strength locally. And again, I think he's a local politician. I don't think he really care that much about Europe or India or Russia. I think he's trying to build his own base here, and I think he's just been rallying the troops, locally.
So whatever
I think
sells
this
in the
this is not,
local.
yeah, whatever sells, the local newspaper. That's the
I know Lindsey
that's the.
Graham's in his ear a lot, and Lindsey Graham, the senator
Mhm.
from South Carolina, or is it South
Yes.
Carolina? I think it is. He's a big hawk on Russia, and has always sort of, I think, advocated that agenda, despite keeping Trump in check a little bit with a majority in the Senate that was willing to come out stronger. It would appear they kind of have given him a lot of rope given Trump a lot of rope. That Senate majority, Republican majority in the Senate, have given him a lot of rope to be a little bit softer on Russia. But I think maybe that road is ended. That would be my sense of things. That you have to watch the Senate for some insights here. Let's go to the survey question. Again, sort of looking at where we've been talking this morning, what is the biggest driver of oil prices going into Q4? Supply surplus, which, as we've talked, has been the dominant narrative all year, and it has yet to arrive. So hence number 2 option, what supply surplus? Number 3, Russia spreading its war into Europe is clearly has a stress into the markets this week. I mean, even the sake where Denmark apparently is having problems with drones tracking over their airports and having some. I mean, Denmark is deep inside Europe. One would say it's not a Baltic state, so this is getting serious. One might think. China stockpiling, which of course we haven't mentioned yet, but of course has been the biggest sort of talking point. It was in Singapore, at least at APEC, and the idea that China has an endless appetite to buy and store crude oil at these prices. So which of these is the biggest driver of all of them? Of course, it's all of the above in anybody's sensible mind. But if we were to pick one, which is the biggest of this going into Q4? I think the supply surplus is kind of losing some wind in its sails, but will it have bite? Will it bite back? And that APEC, I think it was the APEC conference where there was a forecast of $10 decline in Brent through the fourth quarter because of the supply surplus expected. So which of these 4 do you think is the kicker? Amina, looking at the element of where Saudi Arabia goes and the Gulf states in this moment of somewhat departure, in the sense that we've come to the end of a period in which all OPEC plus members can participate in market increases, in supply increases. Where does that go, do you think, for the cohesion of the group? Is another favorite chestnut to speculate the harmony and cohesion within OPEC and OPEC plus. But in a world where quotas are increasing and very few can eat it, what sort of stress or challenge do you think that brings to the organization over the next 3, 6 months?
Overall, I think cohesion is still at a good level, Sean, because what's happening now is basically a reset of the system that we had previously. You had a bunch of countries, mainly, I mean, the Gulf states, sitting on spare capacity, really cutting those barrels. And I'm talking about Saudi Arabia in particular here. And then their chance to kind of, gain back that market share that they've lost. So it's a reset to the system. And I think what they're trying to do here is just, get rid of these voluntary cuts, reassess the baselines, and then go back to an agreement where you have a more collective effort in proportion. So this kind of needed to happen in a way. But saying that, I mean, if we do get turbulence along the way, given how unpredictable this market is, they kind of also position themselves very carefully, saying that, okay, if we see that, conditions change, the huge oversupply, we see a massive increase in stocks and the curve going into a contango. I mean, whatever these factors are, they could always go back to cuts or pause these increments. So they're being a little bit cautious with the messaging.
Ahmed, same thought to you there. I mean, if we are going into a period now where it's kind of supply increases into maximum capacity that where countries are at, what's the purpose of an OPEC plus?
Sorry, what do you mean? What's the purpose?
Well, I mean, if everybody's producing, I mean, typically OPEC plus and OPEC has a relevance and an impact when they're trying to stop the knife dropping through the water. But when everybody's producing at full capacity, what's the purpose?
Yeah, I
So
agree.
a question that
No,
challenged the cohesion.
Absolutely. So I agree with the idea that it's a nice phrase, a reset, because again, there was a lot of confusion when you had layer upon layer of voluntary cuts. So now you're actually, the way I would describe OPEC strategy this year is basically recalibration. It's recalibrating your physical base with your strategy, and actually because of the way that the Brent, the change of players in the Brent curve and how they respond to OPEC signals has changed so much over the last, say, 5, 10 years that actually having a bit of clarity and recalibrating or really marking to market your quotas with your actual baseline is a really key part of where we go next. Why? Because you've always had these issues with regards to announcements of cuts, but then it's not actually representing anything. It's just a paper cut. So I think,
which is now the case on the upside. It's a paper increase.
Yeah, and I think for some of these countries, who are complaining about their baselines, by accelerating, as I said earlier, accelerating the unwind, you actually allow them to test their real capacity. So it becomes a cleaner conversation when you're negotiating capacity assessments. But obviously, the market is moving very quickly, and there's a lot of moving parts. And I think maybe the two things that we didn't talk about, but are becoming also really important is just the situation with refining margins. So OPEC are also not only just looking at inventories, but they're also looking at the state of refining margins, particularly for gasoline and diesel. There's a lot of counter seasonal price action, but also I think now with this, again, the wild card is still the Russia disruption. Where does it go next? I don't think anyone knows, but it's certainly. What's the point of OPEC is the fact that they've still got the ability to respond very quickly compared to, say, previous years. That's probably the biggest lesson that we've learned is their ability to change course quite quickly.
It certainly feels like we've reached the end of the COVID era, the COVID drama, the massive cuts, 10 million barrels or whatever it was on the first hurdle, and then all of the ripples that went out for the years after that, and now it seems in some ways that this is a kind of a full stop at that, and we need to sort of get, as you say, recalibrate back to post-COVID era. Max Torres, last word for you, building on your last comment. Trump is for the domestic audience. What is Trump's relationship with Texas, with Houston, with the, drill baby drill, and yet he wants oil supply all over the world and oil prices low. How is that relationship currently sitting?
Well, again, that is a sort of a tense relationship, as you pointed out. Basically the oil price low is not helping.
A lot of
And
layoffs
activity
in the
not
industry in America.
I agree, and essentially, as I said in the beginning, we are seeing here in Texas, lower activity, lower rig numbers, lower service companies. So everything, is slowing down, twofold again. One is the price and the other one is just a mature play. We're basically facing, a mature future for the Permian. So, but again, it's a tense relationship between the two. I mean, they are not getting what they were expecting. Let's put it that way.
Well, we're going to have to wrap it up there at 11 o'clock here in Dubai. Our 30 minutes together is over. Russia spreading the war is getting some attention in the voting room here. Supply surplus a little behind. So we'll have to watch that going into the fourth quarter and get all the answers to all of these questions, of course, when Ahmed comes and joins us in Fujairah next week. And maybe, Amina, we're still keeping our fingers crossed, we'll be making it to the Indian Ocean coast of the UAE. We have our big annual gathering next week, and we've got a bumper few days planned with something like 40 sessions, 80 speakers, and not enough time to do them all, but having to compel our delegates to choose between lots of very interesting sessions. So we'll be off the podcast next week, focused on the forum in person rather than online. Back to basics, as we're saying, pre-COVID, at least for a week. Thanks, guys. Amina, thank you so much.
Thank you.
Ahmed, thank you so much. Max, have a great
Bye.
evening.
See you, everyone.
Thank you for staying up late. Thank you for getting up so early.